I told you guys a while ago that everything was going to come down together. I'm talking about bonds, cryptocurrencies, real estate, stock market. You're seeing it all play out now. Speaking of cryptocurrencies, you're seeing a lot of these altcoins that are getting absolutely hammered, even more than the big ones like Bitcoin and Ethereum. Ethereum, Bitcoin is coming down a lot, but altcoins are also taking bigger hits than that. A lot of them will go to zero. There will be a capitulation point in cryptocurrencies, and I'll tell you when that's going to be, which is why you should subscribe to the channel, but it's not yet. And after a 40-year bull market in bonds, you're starting to see bonds losing value. They're not so safe of an investment anymore. Bonds trade inverse to yields, so when you see the yields on bonds spike, that means that the value of the bonds is decreasing. You want to own a bond and see the yields falling. That would be a more effective investment. And I've been banging the drum about the stock markets for a while now. They've been well over their skis. They're well overvalued. They need to come down a lot back into realistic levels. That's why I'm always telling you I got out of GameStop, Harley Davidson, Cracker Barrel. I got out of McDonald's, which maybe I shouldn't have because that'll do fine in a recession. But I got out of all of the blue chip stocks, Under Armour, everything, a while back. And if you think about it, getting ahead, getting upstream is so much more profitable and effective. And if you think about it, when altcoins were a lot higher, and I was telling you that it's going to be a washout, and if you had acted then, or now with real estate, if you bought a house now, or if you're thinking about selling your house, maybe now's the time to do it before everything I've told you is going to happen is happening. And speaking of real estate, it's just beginning to turn the corner. It's going to be coming down for a while now. And it's not just because of interest rates. That's what everybody else is telling you. Those are the people who are not upstream, the one-dimensional thinkers. It was already going to come down. The increased interest rates are going to make it more difficult, which, by the way, makes it more difficult for you to make your car payments, your credit card payments, or corporations that have a line of credit. They have to pay more to service the debt that they take on. Anyone with debt, which is everyone, every corporation, every municipality, every state, anyone with debt is going to have a harder time paying for that debt. And if you think we're going into a recession, which we are, and I told you about all that before anybody else was talking about it, then we're definitely going into one now with the higher interest rates. We would have gone into it even without the increase in the interest rates, but this is going to make it so much worse. And it's also going to expose how fiscally irresponsible we've been and how much trouble we are in. With low interest rates, we were able to ignore it for a while, but those days are over. And all of this means we're going to go right into what I've been telling you about for ages now. We are going to have a tsunami of defaults, delinquencies, bankruptcies. And you're starting to see those more now, and I'm going to talk about a few of those in this video. And a lot of the times, the firings and the bankruptcies are going to lead to a lot more unemployment. Unemployment's so low right now, and people say it might go higher. Of course it might go higher. It's got to go higher. It cannot go much lower. But with inbound recession that now everybody's talking about, they're starting to talk about it. Some people are saying, oh, it'll be a soft landing. And here's the thing. You'll see an article that might say, oh, there's going to be a soft landing or a mild recession. But the thing is, what is that really? Because no matter what you're talking about, I can show you hundreds of people saying either side of that argument. Some people say it's going to be a really bad recession. Some people say there won't be one. Some people say there's a soft one. And so when you see an article in the media that says it could be a soft landing, that's just who the media chose to put in front of your eyes. That's who they chose to put their focus on for that moment. It's got nothing to do with anything. What somebody says, there's a million people saying the opposite. So don't read too much into what you see, which is chosen by the media at any point in time. They think it's best for them to talk about that this guy says this, and we'll put that in the spotlight. But there's so many people saying the opposite. So take all of it in that you can, but you have to decide on your own what you believe and what you think is going to happen. You are the common denominator of any kind of investment decisions you make. You might blame somebody else. You might say, oh, I would have made more money if not for listening to that guy. But you listened to him. It was your choice. You had the money, and you got to decide what decisions you make. The autonomy of investing, wherever you end up, is based on the decisions you make. Sometimes you listen to the wrong people. I mean, some of these people, I figured out the way to get a lot of viewers on YouTube is to wait till Bitcoin's at 69, 70,000, and you say, everyone buy it, it's going much higher. And I quote, it's going much higher. Apparently that's how you build a big following. But I'm not here to pick any fights or kick up any dust. I do believe inflation will fall. In my overall premise, I believe that we're heading more towards a depression than a recession. I believe that if we don't get the greatest depression ever right now, if we recover out of this current recession coming up, after that will be the greatest recession of all time. It's either going to happen now or next time. I don't think that we'll have another couple of kicks at the can. I think that we're so close to end times financially, and I'm seeing it on the streets here. Everybody around here is having financial, holy, a huge branch just fell. I see it around here. Everybody's having financial troubles. A lot of the people who are just living their life here in the lower east side in Manhattan, they are having more financial troubles than they have in a long time. But I'm wrong plenty of the time, 100% of the time actually. I'm wrong plenty of the time, and the one that I was wrong about that surprised me is gold. I believed that once gold broke through $2,000 an ounce, it wasn't going to look back ever. But that apparently didn't play out. It broke above 2,000, came back down, and it's been hanging in there, sort of lingering around, sort of like I do with a small, powerful group of awesome YouTube followers, a really good, strong channel, unlike any other channel out there. We do it quietly, we're right about stuff, we're the underdogs, but we're just gonna linger around and around, just linger around until we get our time. And gold is the same. Gold will go much higher, in my opinion, much, much higher. And it will go higher for a long time, the rest of your life most likely, once it finally starts breaking out. And I put my money where my mouth is because most of my investments are all centered around the power that's going to come out of gold. A lot of gold miners, once the price of gold does what it's going to do, then the gold miners' profit margins are going to absolutely spike. They're going to explode. And that's going to be felt in all of these gold mining companies that we find. A lot of them are smaller gold mining companies, producers, not explorers, because explorers are a different thing totally. A good producing gold mine is likely to do incredibly well as gold prices start to move. But just remember, before we get into the rest of this video, the media is always late. They're telling you what has happened, not what's going to happen, not what is happening. You want to be getting ahead of the game, upstream. You're going to do a lot better financially in every respect if you make your moves before everybody else knows about them. Like, for example, altcoins coming down, or for example, real estate coming down, or for example, stock markets coming down, or for example, bonds taking a big hit. All of that I was telling you about ahead of time, and if you'd acted on that, it would have worked out very well for you, which again is why you should subscribe to this channel. Just imagine if you had listened to my message, especially with real estate. It is going to take such a hit, and it wasn't even because of the interest rate increase. If you'd listened to that, you would have known to get out of your expensive house or sell your investment homes, which I'm sure is a great problem to have, but to get out of the coming train crash. You guys are so sweet. You guys are cool. You always surprise me. I don't expect it, where people are saying, I hope everything's okay, and well wishes and stuff. Everything's okay. I'm here in New York City. I'm having to stay much, much longer than I expected to, but I'm not going home until I'm done what I'm doing here. I got a few things to take care of. Everything's fine. Everybody I care about is fine. I'll be back soon. Then we're going to do the gold coin contest. We'll just get it going. I've got to get done with this. It's been a year and a half I've been wanting to do this, and it's been bothering me. I want to get it out there. Somebody's going to get the gold coin. Besides the fact that if I wait too long, it's going to cost me a lot more to send you that gold coin. So what's going on here? The economic curtain that I've been talking about all this time is getting pulled back more and more. The delusional market, which we've been in for so long, is finally becoming a little bit less delusional. We're not done yet. It will become less and less delusional as we go forward. And it's a good, healthy thing to see this play out if you had known about it and stepped out of the way of all this chaos that we're going to be facing. A lot of people don't have a lot of extra money, and they're trying to get a leg up, and they're taking such a massive hit. Whether they're in real estate, whether they're in cryptocurrencies, whether they're in stocks, they're just trying to do better. And a lot of what I talked about in that retirement crisis video recently is that a lot of the losses in the stock market are on the shoulders of the retirees. That's absolutely ridiculous and preposterous, and it does not need to be that way. That's just the easy way for the people who are losing all the money for you to get away without taking the hit themselves. So some of these defaults we're seeing, there's the electric vehicle company, I don't remember the name right now, that was a SPAC, and it took about a year before it went bankrupt. It was a great idea. That's the thing I was talking about. People think a great idea is the way to invest. Oh, it's working on a cure for cancer. I better buy that, because what if they get it, it'll go up in price. Every time you see a story stock, or look, we're making the new electric vehicle, whatever, there's so much interest in it, but it has nothing to do with whether or not they run the company well, which is more important than the concept. But to talk about another front-facing default, we just saw a bankruptcy with Revlon. You've heard of Revlon. That's one of the more well-known names that you're going to see, but there's a ton of delinquencies and defaults going on right now. I know of people who have lost their jobs and they have in their employment contract a certain amount of severance fees that they're owed, 6 figures, 7 figures, that companies are just not paying. There's a lot of that kind of subtle defaults that nobody's seeing, phantom defaults. That's already begun. Now you guys get to see all this stuff in the media, especially with the interest rate increase with companies like Revlon, and there's going to be a lot more, and I'll just keep talking about them as we see them, and you'll see them in the media too. And speaking of layoffs, we're seeing a lot of layoffs in these mortgage companies because they know which way the wind's blowing. They know fewer people are taking on new mortgages, more people are selling their homes for lower than asking price. People are taking lower bids to get rid of their homes. This is all how it starts. It's all going to roll out like this, and the interest rates are going to make it so much worse. So you're going to see a lot of declines in home prices, big time. And I've been saying that for a long time now. So you're seeing layoffs in mortgage companies. You're going to see a ton of layoffs in the crypto industry that's been built, this massive industry that employs so many people. All of a sudden it's going to die on the vine, some of it. The faster something rises, the faster it falls. This is going to play out the same with a lot of these cryptocurrencies. Even home builders are laying people off and slowing things down. And we have everyone living off of credit cards. Now they're going to be paying a lot more. But wait, because they just raised interest rates. Now, you wait about a month and people are going to see the effect of that at that point. They're going to get their credit card statement and realize that they're a little bit more trouble than they realized during a time of such inflation, which I do still believe will come down soon enough, but not yet, and not until the port closures are worked through. The latest one was just in Shanghai, and we keep getting through these port backlogs and all these ships floating out in the ocean full of cargo. We're working through that slowly. It's going to take more than a year, but then they keep closing down ports again, and it makes it worse again. But inflation, and I'm always talking about price inflation, the inflation you see at the grocery store shelves, that will start to come down, I believe, going forward as we enter what I'm saying is my major premise, is the absolute greatest depression we have ever seen. And people are feeling it now, and they're starting to be more aware of it, but the vast majority, and I can tell you about people walking around here, they don't have a clue. Everybody's going to get wiped out. They're flat-footed, they're staring like a deer into the headlights. And this is all happening under the guise of the cost of life. The price of living is just getting greater and greater and greater, with food, shelter, and energy. And I got one of my favorite testimonials again, and I noticed these. I got this comment a few other times before, and it always made me feel good, and I love it because I agree with it. They say, this is my favorite channel on YouTube, and I really would hope that it would be, because we've been helping a lot of people sidestep a lot of these dangers, and a lot of what we do to find ways to turn $500 into a few thousand. That's what the peterleeds.com newsletter is about. But I just wanted to say that I agree with you, and thank you for saying that, because I also think that this is my favorite YouTube channel. It's actually what I expected to make. This is what I was envisioning for so long, and it's finally all coming together. So what's next? We get real estate's going to come down hard. The altcoins are going to be under pressure probably forever. I do believe that we'll get on top of inflation, but the overall economic hardships we're all about to face, the response to that from the powers that be will be more extreme quantitative easing, massive amounts, more than before. And so when they do that, what's going to happen, either it happens then, or if they then step back and then the next one after that gets even bigger, they think what they were doing before wasn't big enough, and now this one, they'll take care of it and they'll give a multi-trillion-dollar bailout or print that much money. When they do that, that's when we start to face what I believe is going to be hyperinflation. Not yet, but it will happen in response to the government's response, the Federal Reserve's response to all these people who are suffering, and they don't want to admit that it was their fault. And always remember that I and the entire Peter Leeds team loves you guys. We do this for you, and we do this because of you, and that is a fact. Nothing we say here is intended as trading advice for you. You have total financial autonomy, and I want to tell you something about this. A good way to become a better investor quickly is to take total responsibility for every decision you make. If you make $1, you lose $1. It's 100% you. You are the common denominator. And you'll find that if you don't look to blame other people, and you only make your own decisions and you blame yourself, but you also take the glory in all the profits you make, that'll make you a better investor overall for a long time going forward.